Certainly don't expect to see the Fed cut rates when they meet on March 18th. They're going to see how things play out. If this blows over, if the economic impact is limited, then I think the Fed can get away without cutting rates. But it depends on what happens in the data over the next month or two.
You know, Bill Lee, who's at Milken now, he was at Citi for a long time, had, I thought, a great idea that he mentioned just last hour, which is there is something the Fed can do. They can offer regulatory forbearance to small businesses in the case of defaults or business disruption during this period. Why not use a tool like that instead of this constant commentary about rate cuts?
Well, I think the Fed is going to be looking at all of their options. You know, we've seen long-term rates decline, so that's providing some easing. The Fed can certainly look at things that it can do from a regulatory front to provide relief to banks and to small businesses. They need to consider all of their options, but certainly rate cuts are the primary weapon in the Fed's toolkit. And if the Fed feels that it's necessary, then we'll see them later this year. As of now, I just don't see that happening yet.
So, Gus, how does the global economy avoid, certainly the areas in Europe that may be right on the cusp of recession, or some of the areas in Asia, like Japan, that are very close to it as well? How do they avoid tipping into recession if the world's second largest economy flatlines for at least the first quarter and maybe well into the second?
It's going to be difficult, and obviously we've already seen very aggressive monetary policy from the Bank of Japan and the European Central Bank. It's unclear how they can be much more aggressive than they have been. They may require fiscal stimulus, although that takes some time to ramp up. It may be inevitable that we do see mild recessions in those countries. The question is it going to hit the U.S.? I think the U.S. fundamentals look pretty good. Consumers are in good shape. The labor market is in good shape. So I think even if we see a mild recession overseas, that doesn't necessarily imply a recession here in the United States.
But it might imply a slowdown here in the United States. Would you go that far or not necessarily?
Oh, absolutely. I think we will see noticeably slower growth in the first half of this year. We already have the hit from Boeing ending production, at least temporarily, the 737 MAX. That's going to be a drag. I think the coronavirus will be a drag through the first half of this year. But I think given the solid fundamentals, I do expect that the U.S. economy will avoid a recession, although we will see slower growth and slower job growth associated with that.
All right, Gus, thanks for your time today. Gus Faucher, we appreciate it.